Hey everybody, Courtney Smith here with our Wall Street winners for June the 21st. Happy Juneteenth. New holiday in the United States. Love having every new holiday. Love having this disclaimer here. It's fantastic. Okay, so we got the next leg on the downside, and we're going to continue to have more on the downside. This bear market is not over. We should expect to see some type of a more significant rally coming up in a week or two, and then we're going to have an even bigger decline as we go into the fall. Now, one thing that was bearish was notice these gaps here. Big gap down here, big gap down here. But now we're seeing a little bit of stability, and look at the volume here. This is actually a little bit bullish. This heavy volume, now this is what's called a doji day, where it opens and closes at the same price. It's a sign of neutrality, that maybe the bulls were able to mount a counterattack after the bears winning for a long time. So this is the S&P, two gaps down, very bearish, clearly a bear market, one sign of stability, but that doesn't mean it's a bull market yet. So we want to remain on the short side. Same thing over here on the Dow, two gaps down, no real stability down here, but look at up here. You can see that the selling pressure, which is the little red line, has gotten up to a level which is not sustainable. So we're just not going to see that much more selling. So I think we'll see a little bit of a rebound here. Not a big deal yet. We're going to get a nice rally, I think, in July. But we're going to see some stability here because this level of selling is unsustainable. You need to have, we're not going to go up because the buying is very, very low. Okay. And you have to have buying in order for the market to go up. But we're going to start to see less selling, and that's going to help the market stabilize here. And then over on the NASDAQ, the same sort of a thing. Oops, sorry. Over here, see the heavy volume on Friday. Very interesting. So once again, looking for stability, not much of a rally. The rally will probably start in a week or two, all right? So that's what we're looking for. Seasonality, neutral for both of our ETFs. But here you can see that the seasonality, according to Stock Traders Almanac, which we recommend, is bearish for the next week. Then at the end of July, you can see there's this rally here, and we're following the blue line here, or I'm sorry, the red line here, because so far it's worked the best of all of the things on here. So here we go. We should see a nice rally, but then an even bigger decline starting in August. So that's what we're going to look for on the long side, but then we're going to go back to the short side. But right now, we're not going to do anything. Asset allocation. So what this shows is that people are moving their money out of stocks and into bonds. That's what this decline means. It means that they're saying, you know what, I don't like the riskiness here in the stock market. I don't want to really be that risky. Why don't I just buy a bond? Because bonds always mature at 100, so I always know I'm going to get my money back. But if I buy this XYZ stock, who knows where it's going to go. But if I am going to own stocks, then our stock market RISKDICATOR is telling us I better buy the most boring stock I can find, the least risky stock I can find. So that would be things like utility stocks, okay? So they're bailing out of stocks and they're putting their money into the least risky stock they can find, okay? Boring, but not as risky. Global shares are even worse than the U.S. Yield curve coming down. Now, why is it coming down? Because the Fed's raising interest rates. Look down here at the lower left, and you can see the Fed says they're going to raise interest rates up to about here, which would mean that the yield curve would be flat along the whole yield curve. That's a bear market. That's a recession. That's a done deal if they follow through what they say they're going to do, and I believe they will. Because right now they're panicking about what a big mistake they made at projecting inflation. But you, as followers of the Wall Street winners, even if you're a freebie, know that we've been saying that inflation was going to skyrocket. Last year we said that. Okay, bonds. under pressure. Purple predictor a little bit bullish, so we might see a little bit of a bounce here. But when the chart starts in the upper left and ends in the lower right, that's the definition of a bear market. So you got to continue to remain short bonds. Here you can see all of our indicators are screaming to the upper right. What does that say? Higher yields in the bond market. Now, if there's higher yields in the bond market, that has been supportive of the dollar. But the last couple of days, it was kind of shaky. I think a lot of foreigners are taking money out of the U.S. stock market, even though it's about the best performing stock market in the world, other than China. And they're just saying they want to go to bonds in their country. So we're seeing some selling of the dollar there. But Friday, it bounced right back up. Why? Because yields are higher in the U.S. than just about any other developed country. Gold, if the dollar is strong, that means gold's going to be weak. Gold, it's just going to keep on drifting lower. Now, August is seasonally a very strong month because it's when Indians buy gold in preparation for the wedding season in the fall. That's kind of the last hope for the gold market. Our gold key indicators, I think 3 are bearish. It's just a bad scene for the gold. Don't want to be long gold. Please don't be long gold. Now, this is a fascinating one. Crude oil broke this last week. I started to get out of my long energy positions the week before, but I got rid of all of them this last week. I don't have any long energy positions at all. And furthermore, I think that crude oil is going to go lower now. And it's going to go lower because people are finally realizing that there's a recession coming. And that if there's a recession, there's not going to be a demand for crude oil. People are also finally figuring it out, that the Russians know how to export oil through the back door. They can't ship it really out of the front door anymore, although Europe's buying more oil. The U.S. is buying more oil. Even with sanctions, the West is still buying more oil from Russia than they did a year ago. But we also saw facts come out that showed that the Chinese are buying a huge amount. The Indians are buying a huge amount of oil. But here's what triggered it all. The announcement that Joe Biden, climate warrior #1, has decided that oil is a good thing. Why? Because inflation is a bad thing. So even though he won't let the Americans pump more oil, he wants the Saudis to. It was announced that he's going to Saudi Arabia. Now, the Saudis weren't even taking his phone calls because Biden had insulted them so much in many ways. But now they're going to meet in July, and we know that Biden will do and say anything to get more oil from the Saudis to hammer the price of oil, which will hammer the price of gasoline, which will help the fight, not solve the fight, but help the fight against inflation. So you're going to see announcements like Joe Biden promises to provide more support in the battle against the Houthi rebels in Yemen. He's also going to apologize for calling Saudi Arabia a pariah and evil. He's going to apologize for those things. We won't hear about that, but we will hear about the new support for the Yemeni Houthis. So Saudi is going to start pumping oil in a month. The market's starting to react to that. Bitcoin, still very bearish on Bitcoin. Look at the heavy volume here. We saw the collapse. We saw the collapse of Luna a couple weeks ago. This last week, we saw the collapse of Celsius. People are realizing that maybe crypto's not as safe as we thought it was. Decentralized? No. It's all centralized in exchanges. Technically, Bitcoin is decentralized, but that's not the way 90% of people are trading it. They're trading it on an exchange, which means it's centralized. So you're going to see Bitcoin go lower. Now, I just wrote one of my trade secrets. You really should subscribe. It's absolutely free, which tells you exactly where the bottom is going to be in Bitcoin. Let me give you a spoiler alert. We're going to get down to $9,000 per Bitcoin. And right around 9,000, give or take $1,000, that'll be the low in Bitcoin. It'll go stable. It'll be boring. No one will pay any attention to it. And then a slow bull market will begin. It's not going to take us too long to get down to 9,000 either. It might only take another month or so. So got to be short Bitcoin. Got to be short Bitcoin. Got to be short all crypto. Okay, freebies, love having you here. You know what you should do. You should subscribe so you can get the actual trades. Yes, you think it costs money. It doesn't cost money. It pays you money if you do the trades that I recommend.
Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called stockbutler.com. And the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The Stock Butler was developed by one of my brilliant students. Of course, all my students are brilliant, you know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best, that's the name of the technique, and bingo, there's the list. And then, since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E table, update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, Stock Butler saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody. We'll see you later.